Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from a company that seems to be having a bit of an identity crisis, or maybe just a stock price crisis because they might be getting kicked off the Nasdaq. Let's see what's going on. This report is about MultiSensor AI Holdings and is basically telling us that their stock price has been below the required minimum. This could lead to them being delisted from the Nasdaq, which is a big deal. We'll break down what happened, what it means, and what the company plans to do about it. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss these topics with other investors. Scrolling in Statescom Scrollers is a standard Form 8K, a current report that companies file to announce major events. In this case, it's about potentially being delisted. It was filed with the Securities and Exchange Commission, or SEC, on May 16, 2025, but the event it talks about happened on May 15, 2025. The company in question is MultiSensor AI Holdings Incorporated in Delaware. Scroll item 3.01 notice of delisting or failure to satisfy a continued listing rule or standard scroll. Here's the heart of the matter. On May 15, 2025, Nasdaq, which is the stock exchange they are listed on, sent MultiSensor AI a letter. This letter, called the notice, said that for the past 30 business days, the company's stock price has been below $1. This violates a Nasdaq rule that requires a minimum $1 bid price to stay listed. So what happens now? Well, Nasdaq is giving MultiSensor AI a chance to fix things. They have 180 calendar days until November 11, 2025 to get their stock price back up to $1 or higher. If the stock closes at $1 or more for at least 10 business days in a row before November, Nasdaq will send them another letter saying they're back in compliance and everything is fine. But what if they can't get the stock price up by November? They might get another 180 days, but only if they meet certain requirements. They need to meet the requirements for things like market value and other financial measures to stay listed on the Nasdaq capital market. They'd also have to tell Nasdaq that they plan to fix the problem, maybe by doing something like a reverse stock split, where they reduce the number of shares to increase the price of each share. However, Nasdaq could still decide to delist them if it doesn't think the company can fix the problem, maybe by doing something like a reverse stock split, where they reduce the number of shares to increase the price of each share. However, Nasdaq could still decide to delist them if it doesn't think the company can fix the problem, maybe by doing something like a reverse stock split, where they reduce the number of shares to increase the price of each share. However, Nasdaq could still decide to delist them if it doesn't think the company can fix the problem. Scroll to monitor the closing bid price of its common stock. Scroll PEEP. MultiSensor AI says they plan to watch their stock price closely and are considering different ways to get back into compliance. One option is that reverse stock split we talked about. The company wants to stay listed on Nasdaq, but there's no guarantee they'll be able to pull it off. This section lists the exhibits. In this case, it's an interactive data file, which is the raw data for the report. Right, that was the delisting notice report. Now let's move on to what it means. What do we make of all this? Well, a delisting notice is never good news. It means the company's stock has been underperforming for a while. Now let's forget about the legal stuff and just analyze the main points. What does all this mean? This company, MultiSensor AI Holdings, is in a tough spot. Getting a notice from Nasdaq about potentially being delisted is like getting a warning from your boss that your job is on the line. The company has until November to get its stock price back up, but there's no guarantee it will happen. The fact that they're considering a reverse stock split shows they're taking it seriously, but it's also a sign that they don't see another way to quickly boost their stock price back up. But there's no guarantee it will happen. The fact that they're considering a reverse stock split shows they're taking it seriously, but it's also a sign that they don't see another way to quickly boost their stock price. Assessment of company direction. The situation reveals weakness. The fact that they need to consider reverse stock split shows they lack other means to solve the issue. Doubt notable risks or opportunities. There is no upside from a delisting warning. Tallow conclusion. While the company may improve and avoid delisting, I personally would not touch this stock with a 10-foot pole. Alright, that's our breakdown of MultiSensor AI's delisting notice. What's your take on this situation and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.